What up, Hyperchange? Welcome to another episode. Today we're talking about NIO stock, originally touted as the Tesla of China. NIO received huge hype IPOing on the New York Stock Exchange for a valuation of billions of dollars just a couple years after founding. Well, now fast forward to about a year since the IPO, the stock is down about 80%. Started out $6 or $7 a share, hit $10 a share a couple times, trading at about $1.50. As I make this episode, gotten a ton of inbound requests about what's going on with NIO. I made a lot of content about them. Actually was in Shanghai in very early 2019, visited the NIO store, saw a bunch of the NIOs on the road, was very impressed with NIO on the ground in China. But since then, they have totally underwhelmed expectations, and that is why the stock has taken a hit. So in this episode, I really wanted to get into the numbers and sort of review this fascinating EV case study and sort of see what has gone wrong with NIO. So we're going to start in Hypercharts. You can go to hypercharts.co/NIO to follow along with me. We're going to look at the data, see what the numbers are saying about NIO, and because I think that's really just going to explain everything here. So NIO, an electric vehicle company, the ES8, their sort of luxury SUV is the main car they were launching. That is what they were delivering in late 2018. As you can see, huge growth in deliveries for NIO. We saw them go from none to almost 8,000 a quarter, hundreds of millions in revenue. And this is when everybody, we were at peak NIO. Everyone was like, wow, they are really delivering. They are growing. They were about to launch the ES6, which is a cheaper version of their SUV, like a sort of smaller, more compact version. That was supposed to grow sales tremendously. They were expecting, I believe, 40 to 45,000 deliveries in 2019. So it's set to be huge growth. Well, now what has happened in 2019, as you can see, deliveries have fallen off of a cliff instead of growing. That delivery guidance is basically out the window. And then the problem is once you stop hitting your guidance or your financial targets, the entire model starts to fall apart. And before I get too into the financials here, I just wanted to say that I think what's going on with NIO and a lot of these EV companies is, frankly, this is a really, really tough business. Building complex manufactured items, cars, and selling them profitably, especially when it's a new technology like batteries, is just, frankly, an extremely complex, low margin, very capital intensive business. If your production lines aren't at full capacity, if the demand isn't there, especially when you're not fully ramped with economies of scale, your financials, who are already looking, already have an uphill battle to get to profitability, are going to fall apart extremely quickly. You start needing hundreds of millions of capital, and it can get to be a very dicey situation very quickly. That's why I caution all of these, exciting EV startups, which are in what I call the honeymoon phase, which is what we saw NIO crush it in, which is where you've raised hundreds of millions of dollars, you show a flashy prototype, everyone's super impressed, and then all of a sudden it's like, wait, okay, it's easy to build one prototype for $500 million that no one's going to drive that looks good. Now let's try and build thousands of cars at a profit margin that are making customers happy. That is actually the challenge in building the machine that builds the machine. And that is where, frankly, NIO has fallen flat. So if we go back to the Hypercharts world, you can see that if we take a look at revenue and operating income, you can see it's basically followed the chart of the deliveries, of their revenue has. And what's really hit them is the gross profit. They're not even making any margin on these cars. It was improving here at first, although it was basically no gross margin, but they had some in Q4 2018. But as their scale hasn't been there, the profitability per unit, they're losing more and more money for every car they sell, not even taking into account operating expenses. And so that's why when you include the operating income, the losses haven't shrunk, but they've started to grow again. And we're literally looking at almost 500 million in losses per quarter. I mean, this is a business that is going to need billions of capital to sustain its operation unless they turn it around immediately. So these financials are extremely underwhelming. And so now you have a company that's still trading for, $1.5 billion or $2 billion, but their revenue here is shrinking. They're doing less than $1 billion in revenue per year. Their gross profit is negative. They're losing billions and billions of dollars. So, just some quick back of the napkin math here. If you're only a $1 or $2 billion company and you need to raise $2 billion a year to keep your company afloat, you could be doubling your share count every single year just to be able to pay your bills. And so that's how you start to get into this downward death spiral, where companies that are extremely capital intensive, that have a lot of, factories that they have to pay for and employees that they have to pay for, if things go wrong, if the economy takes a hit, if their product isn't successful, they can spiral downwards extremely quickly. And so that is what we've seen with NIO. I personally was never a shareholder of NIO, never invested in the company because I was never fully convinced. So never got involved on that level. But I think I've been following it super, super closely and will continue to, because I think it's a fascinating case study. As someone who's long Tesla, this is why I think Tesla is an extremely risky investment on some level. And I think those should proceed with caution, especially when you look at what's happened in NIO and you really realize that, like, when you're building these car businesses, it's no wonder every single car company is going bankrupt in every single recession. It's because the second the sales stop coming in and they still have to pay for all these factories, the entire model can crumble quickly. And so that's just one thing I think is important to keep in mind for Tesla, is that, there's a very real risk that Tesla could go bankrupt, and it could downward spiral extremely quickly if a similar situation to NIO happens. And that's just the reality you have to face. When I'm thinking about Arcimoto, this other, three-wheel EV startup I'm investing in, they have the same risk to their business model, where if the sales don't come in, they're going to start losing a ton of money. They're going to be forced to raise money not on their terms. They're going to be, dilution's going to get priced into the stock, and you're going to see exactly what's happening to NIO. So I think this is a cautionary tale about what can go wrong in the EV space when excitement gets too high in that honeymoon phase. But on the flip side, I also think, NIO's not totally dead yet. They're going to need a lot of funding to get them out of this hole, but they have the cheaper ES6. Deliveries bounced back a little bit in Q3. They did something last quarter, which I'd never heard of in the history, or I have heard of a couple times, but it's really rare and a bad sign, which is they canceled the conference call last minute because the results are so bad. So I don't know what they're going to do this quarter, but that's never a good sign. So anyway, this is just kind of an interesting story to watch unfold, and definitely a cautionary tale. We're looking at Rivian. They haven't built a single car, yet Amazon has just bought 100,000 delivery vans for them. I mean, this is part of the reason why when I say I think Amazon made a brilliant move to not buy Rivian yet, but partner with them, make Rivian spend all the money and all the billions of R&D and CapEx to sell them vans at a 0% gross margin, so Amazon doesn't have to take on any of that risk. I think this NIO business model sort of supports that strategy that Amazon and is taking for Rivian. And so when I think about Rivian, when I think about Faraday Future, when I think about Lucid Motors, Fisker, Bollinger Motors, every single one of these startups, I'm like, man, it is going to be really, really tough to get to where Tesla has gotten and get beyond this burning hundreds of millions of face. So anyway, that is my wrap up on NIO. I still think there is a chance for the company to pull out of this, but man, things are looking bleak. The product did not deliver. They did not focus on making customers happy. I think part of this was that the batteries were a little bit underwhelming in their performance, and then you just start to lose consumer trust. You start to lose word of mouth. That is why customer happiness is so important. And what Tesla's done and deliver and make people love their products has led to amazing word of mouth. But you see how just detrimental the flip side of that can be, and how quickly things can turn if that's not the case. So anyway, this is my wrap up on NIO. I hope you liked it. Let me know what you think in the comments below. Huge shout out to our Patreon producers, supporters, fun in the channel. This is Hyperchange. I'll see you guys next time. Peace.